and so lengthy, what I can say, Union Budget 2024. First of all, I request our Zone Chairman, Shri Vijan Ablakhaji, to kindly give his welcome note. Vijan Ablakhaji.
सर नमस्कार।
नवलखा जी आपको अनम्यूट कीजिए आप। नवलखा जी अनम्यूट कीजिए आपको।
नेशनल प्रेसिडेंट मिस्टर जैन साहब, डिप्टी प्रेसिडेंट श्री सबिदानी साहब, जनरल सेक्रेटरी श्री काकरा साहब, श्री पंकज घिया साहब, रोहित साहब, राजेश मेहता साहब, माथुर साहब, एम संदीप अग्रवाल साहब और नेशनल के सभी बार के पदाधिकारी का मैं आज के सेमिनार में स्वागत करता हूं, अभिनंदन करता हूं। विशेष रूप से आज के स्पीकर श्री अनिल माथुर साहब, श्री पंकज घिया साहब एवं श्री प्रशांत जी बेंगलोर से हैं, मैं उनका विशेष रूप से अभिनंदन करता हूं। आज के इस कार्यक्रम में 2024 के जो बजट सीतारमन फाइनेंस मिनिस्टर साहब ने आज सदन में रखा, उसकी डायरेक्ट और इनडायरेक्ट टैक्सेशन के क्या इम्पैक्ट हैं, उसके बारे में विस्तार से हमारे लर्नेड स्पीकर हमको अवगत कराएंगे। मैं एक बार पुनः सभी उपस्थित का मैं अभिनंदन करता हूं, स्वागत करता हूं। संदीप जी।
Thank you so much. Now I request of today's conveners, I request to please conclude in 30 seconds max to 30, क्योंकि आज बजट हमारा बहुत लंबा है। संतोष गुप्ता जी से रिक्वेस्ट करूंगा, पहले छतरपुर वाले संतोष गुप्ता जी। संतोष गुप्ता जी अनम्यूट कीजिए।
सर, आज के इस वेबिनार में मैं सभी का स्वागत करता हूं और चूंकि समय बहुत कम है, मुझको 30 सेकंड ही दिए गए हैं, तो मैं नेशनल प्रेसिडेंट सहित और अपने मेहता जी सर सहित सभी का स्वागत है और कृपया संदीप जी वेबिनार को आगे बढ़ाएं।
हेमंत गुप्ता जी।
Yes. Good evening, everyone. And today we are discussing about the budget declared by Honorable Finance Minister Nirmala Sitharaman ji, and I suppose there is a lot to talk about the budget this time. Mr. Anil Mathur and Mr. GS sir has a lot to speak about this. So I just welcome everyone, all the speakers, all the learned speakers. Mr. Pankaj Ghiya, immediate past president of AIFTP, and I welcome all. Over to Sandeep ji sir.
Request Mr. Ashok Jaithalia ji.
Good evening all. Thanks to the office bearer of AIFTPCZ for allowing me to as a convener. I am welcome all the eminent speakers of this seminar, virtual seminar, and delegates attending the seminar. Thank you very much.
I request our National Vice President, Shri Rajesh Mehta sir, please give his opening remarks in short, please.
Welcome to our National President Narayan Jain Sahab, Deputy President Samir Jani Sahab, and Sandeep Agrawal Sahab, Lakshman Kashyap ji, Zone Chairman Vijan Ablakha ji, and Arvind Mishra ji, and everyone. Today, a detailed budget has been presented in the Lok Sabha, and so many changes in direct taxes have been there, and indirect taxes also there are changes. So we have eminent speaker, respected Anil Mathur Sahab, Prasganth GS, and our immediate past president, respected Pankaj Ghiya ji, is there to discuss on all these issues. And we are having our respected past president Ganesh Purohit sir also here. So we welcome all. And
thank you, sir. Thank you. Our National Secretary General Kakra sir. I can't see you in the list. Kakra sir is here. Kakra sir. I think he's still. I now request our respected National Deputy President Samir Jani sir for his opening remarks.
Good evening, everyone. Most respectful salute to the National President, the past President Pankaj Ghiya, Ganesh Purohit sir. Well, today's budget, we are here to talk on today's budget. In fact, it is sunset fresh, because no time has gone, and Central Zone, as usual, is the topper, the feather in the AIFTP crown to be with this webinar. I would say this is more of a political budget, compulsion budget, because the Bihar, Andhra support, Orissa has got fiscal help from the finance minister, the government. Still, however, it is a case of learning, unlearning, and relearning so far as reassessment is concerned, because there was previously 158, 153A, then came 158 BC, then came 153A, and now the same language of 153A has been reintroduced. The draconian part provision is removal of second proviso to section 48. The learned faculties who have been given time of only 4.5 hours, for which the national finance minister took 45 days to prepare, will be told to us within a span of 4.5 hours by the faculties. I salute the faculties. Anil Mathur ji, Prashanth ji, and Pankaj Ghiya ji, as usual, the GST maestro. There are various provisions. I wish the faculties could deal with all of them, like set aside of appeals. It will now be permitted. Holding period of long-term capital for long-term capital asset has been reduced to 24 months. GST, there are several provisions like restrictions for section 74 demands, 73, retro introduction of subsection 16.5 and 16.6. Conditions have been imposed for waiver of penalty for orders under section 73, and transitional credit has been amended. I hope all of these areas will be looked into by the faculties present over here, and I salute their efforts within a short time. Thank you, Sandeep ji.
Thank you, sir. Thank you so much. Now I request our most respected past president, Shri Ganesh Purohit sir, for his opening remarks in few words. Ganesh Purohit sir. Sir, please unmute yourself, sir. Ganesh Purohit sir. I think he is unable to unmute. Now I request our national president, Shri Narayan Jain sir, to please give his opening remarks. Narayan Jain sir.
Thank you. माननीय पदाधिकारी सदस्यगण, पूर्व अध्यक्ष गणेश जी, इमीडिएट पास्ट प्रेसिडेंट पंकज जी और सभी साथियों, हमारे डिप्टी प्रेसिडेंट समीर जानी जी बहुत कुछ बोलना चाहते थे,
नहीं सर,
लेकिन तो अभी क्या है कि हम लोग पोस्ट होल्ड कर रहे हैं ना, इसलिए हम लोग कम बोलते हैं लेकिन क्या है कि मन में बहुत सारी बातें हैं। तो ये देखिए, ये इस बजट में भी बजट स्पीच सुन के ये लगता है कि डायरेक्ट टैक्सेस में ज्यादा कुछ नहीं है, लेकिन जब फाइन प्रिंट स्टडी करेंगे, जैसा कि समीर जानी जी ने भी बताया कई सारी चीजें, फाइन प्रिंट पढ़ेंगे तो आपको देखेंगे कि बहुत सारी चीजें, और बाकी चीजें तो हमारे अनिल माथुर साहब बताएंगे। एक हम लोगों के लिए, प्रैक्टिशनर के लिए भी एक अच्छी चीज है कि वापस विवाद से विश्वास स्कीम, विवाद से विकास स्कीम 2024 फिर लाई जा रही है, जो कि 2020 में काफी सक्सेसफुल थी, जो एफएम ने अपने स्पीच में भी कहा है और अपने मेमोरेंडम में भी लिखा है। तो ये क्या है कि अपने जो प्रैक्टिशनर है उनके लिए भी अच्छा है, करदाता है उनके लिए भी अच्छा है कि डिस्प्यूट मिटे। तो किसी का भी अपील फाइल नहीं किया हुआ हो, टाइम में है तो बहुत अच्छा अपील फाइल कर देनी चाहिए, लेट भी है तभी भी अपील फाइल कर देनी चाहिए, क्योंकि कट ऑफ डेट अभी डिक्लेयर नहीं हुई है, वो हो सकता है गवर्नमेंट डिक्लेयर करे। और बाकी भी सारे प्रोविजन प्रैक्टिस के हिसाब से हम लोग को लिए जो है सब एक एक चीज का फाइन पॉइंट समझना जरूरी है। और गवर्नमेंट को, हमारे माननीय वित्त मंत्री को मैं धन्यवाद देता हूँ कि टीडीएस रेट में काफी कमी की है। और भी कई सारे प्रोविजन उससे लोगों को लाभ होगा। हालांकि क्योंकि मैं खुद भी एक पार्ट ऑफ राजनीतिक तंत्र का पार्ट हूँ, तो मेरे को पर्सनली ये लगता है कि गवर्नमेंट कुछ और भी रियायतें दे सकती थी जो कि नहीं दे पाए। और न्यू टैक्स रिजीम में खाली वो जो 6 लाख तक की थी स्लेब उसको 7 लाख किया है, या 6 से 9 थी उसको 7 से 10 किया है। उससे बहुत ज्यादा फायदा नहीं, थोड़ा सा फायदा होगा। और गवर्नमेंट धीरे धीरे जो है उन्होंने कहा कि भाई 2/3 लोग ऑलरेडी न्यू टैक्स रिजीम को फॉलो कर रहे हैं। अब ये पता नहीं कि फिगर उन्होंने कैसे निकाली और किस हद तक ये सही माने में ठीक है। लेकिन तभी ठीक है, सरकार तो धीरे धीरे यही चाहती है कि भी ठीक है एक ही टैक्स रिजीम रहे। तो आने वाले टाइम में हो सकता है कि सब नया टैक्स रिजीम चलेगा। जैसे पहले स्टैंडर्ड डिडक्शन नहीं दिया जाता था, अब दिया जाता है। इसी ढंग से हो सकता है एटीसी एटीएल वगैरह भी दे दें नए वाले में, तो फिर लोगों को परेशानी नहीं होगी। तो भाई अरविंद मिश्रा जी भी है प्रयागराज से, वो भी बड़े ध्यान से सुन रहे हैं। तो ठीक है साथियों, में आपका ज्यादा वक्त नहीं लेके हमारे जीएस प्रशांत जी भी है, वो भी बोलेंगे। और हमारे नेशनल ट्रेजर तो है ही। आप सबको धन्यवाद। और इस बजट से हम लोगों की सबकी इनकम जो है, काम भी बढ़े और इनकम भी इस साल में कम से कम डबल हो, यही मेरी शुभकामना आप सबको है। धन्यवाद।
Thank you so much, sir. Is Ganesh Purohit, sir? I think he left. Oh, meetings left. Okay. Now, friends, we will start with the first session of. We will first discuss the indirect taxes, and for that, I request our today's speaker, our immediate past National President, Shri Pankaj Ghiya, sir, to kindly deliver his address. Thank you, sir. Welcome.
Sandeep, I will speak at the end.
Okay,
He
sir.
always,
Okay,
he
sir.
always reserves
I
the
don't
right
want
to
to take the
speak at
time of
the-
Pankaj ji.
Okay, sir.
Wow, sir. Thank you. It's a blessing. Good evening, friends. It's really a nice day for all of us. In the morning, we were listening to the budget, and now we are discussing the salient features, amendments, and changes in the budget. You know, sometimes we think what is there in the budget. If we listen to the budget speech, we will find that there is nothing in the budget. And particularly for the indirect taxes, I know I was very relieved when there was a simple line by the finance minister in the GST, the collection has been good and that's all. Now I come to the custom duties. And I thought, oh, there is no amendment. But when I went through the finance bill, galore of amendments were there, and we are now here to discuss it. What I had discussed that I would be given, I had been given 15 minutes to just go over through the amendments. And with the help of my team, I had made a PPT. So I would be sharing the screen and starting the PPT so that you can understand the changes which has come in the budget. So these are the amendments to the CGST and the IGST Act, which we would be discussing. The first is a consequential amendment because this litigation was going on and there were many writ petitions filed in different high courts. Even in Rajasthan High Court, we had gone and filed various litigations because the GST department was saying that ENA, that is extra neutral alcohol or rectified spirit, is covered under GST and therefore it is taxable under GST, whereas the companies were saying that ENA is not covered under GST, it is alcohol, and therefore it is out of the purview of the GST. And that amendment has come. The second amendment, I am going fast with the amendments because that is the need, what is there. It is a consequential amendment if we go through this amendment. This is addressing the discrepancies. The government has taken an enabling power that if they want, they can come out with a directive that whatever the tax collected or not collected or higher tax collected, they can always issue a direction and regularize it. So it is just an enabling provision. Now, for the reverse charge mechanism, now there has been a clarification. I think full screen is coming or not? There is an enabling provision that the tax liability would arise from the date of the recipient when he issues the invoice and otherwise not. And if either the invoice has to be issued by the recipient or by the supplier, and that day would be considered as the time of supply for purpose of section 13 for the reverse charge valuation.
पंकज जी एक्सक्यूज मी, आपका
Yes.
थोड़ा सा स्क्रीन हाइड हो रहा है.
एक मिनट देखता हूं सर. Yes, now it's.
थैंक यू.
Yes. अरे सर इसलिए ही आपकी जरूरत रहती है, आप ट्रेजरर हो, सारे खर्चे बचा देते हो. हाँ. For the input tax credit 16.4, that was the most controversial issue and most awaited amendment. We were thinking that there would be some circular or a clarification or whatnot, but now the amendment has come in the Finance Act, and that is required in the Finance Act, in the central and in the state also. We would be requiring the similar amendments in the state acts also, because now that is necessary. What they had done is they had done wonderful. They had almost closed all the related disputes of section 16.4, that is denial of input tax credit if the return was filed late. Now for the financial year 2017-18 to 2020-21, if the return has been filed up to 30th November 2021, and my friends, the date is very important because this is not a date for every year. This is a cumulative date for all the 4 years. That is November 30, 2021. So even if for the 17-18, 18-19 you had filed return after November or in January or later on, it would be covered. But if you had filed before 30th November 2021, you would be eligible. And then they had proceeded to one more thing, that in case of cancellation of registration, if you file the return within 30 days of the revocation, then the bar of 16.4 would not apply and you would get the benefit of the input tax credit. And that is really wonderful. They had, by this stroke of amendment, they had closed almost 25% of litigation for the initial years, except for the bogus bills we would not be talking about in this ITC method. Revocation and registration, in section 30, they had taken an enabling power that they can issue the restrictions and guidelines and conditions for revocation of cancellation of registration. And that is good because that would help us in moving from the amendment in the act, and they can always come out by a circular, by a rule changing method. Who is supplier and who is not? It is a very minute amendment, but amendment which has having a wide impact because they had clarified that a person deducting tax under section 51, even if he is registered, he would not be considered as a supplier who is not registered, and that he would be considered as a supplier who is not registered, and that would take out many changes, many compliances from him. Deduction of tax at source. Now, only thing is that now henceforth he would be required mandatorily to file monthly return. Till now, what was the implication or what was the interpretation? That he could have filed the return in the month in which the liability arises. For the other month, there was no liability. Now that has been done away with, and he has to mandatorily file the return every month if he is required under that law. 54.15. Now this is a really important amendment because similar amendment has also been done in IGST. My friends, if you are knowing that there were many litigations regarding the export issues, whether if you are doing with export duty, whether if you are doing the amendment reclaiming refund under section 1554, whether the rule 96 and particularly rule 9610 would be applicable or not. All these things had been done. Enabling provision, they had come out because rule 9610, we had filed many writ petitions saying that in the act, that is section 54, there is no restriction about not giving refund in case certain benefits has been taken under the notifications issued for the benefit of exports. But now they had come out with an amendment. This is not retrospective amendment. So it in fact justifies the earlier issues taken under 9610. And that would be a thing which we will see in the court. Amendments to section 70. Now that is a real amendment which we have to understand. There was a persistent demand that authorized representative in section 70 should be allowed. Now don't consider authorized representative as a lawyer or a chartered accountant. And there was a circular issued by the state by the central government that in case of companies, in case of corporates, the managing directors or other person should not be called, and their person who is dealing with that thing should be called. We had filed representations that if a company can be given this leeway, why not a partnership firm or a proprietorship firm or a lady proprietor or partner? And why she has to mandatorily attend proceedings if someone under section 70 has been given? That has been considered, and the word has been added to attend in person or by an authorized representative and make truthful statement. Truthful, anybody's guess. The main course is going on, whether these statements are akin to a statement given in a police station or under section 164 of the erstwhile CRPC. That would be considered, but that thing is going on. But what they had added is attendance in case of a summon under section 70 by an authorized representative. So any person other than the person who has been summoned, if he goes with an authority letter, he can be considered and his statement would be bounding, and the person in whose name the summon has been issued would be related, would be covered by those statements, and he has to confirm that whatever has said, he also agrees with it. Section 73, 74, they had been restricted to 2023-24. 74A, what has been done is 74A, new section has been inserted, which would be applicable from the financial year 2024-25 onwards. What they had done is 73, 74, they have merged into one section, same limitation, that is 42 months. Here in 73, there was a limitation of 3 years. In 74, there was a limitation of 5 years. Massive litigation, extension of time, section 168A, extension of time litigation in various high courts was going on. That has been done away with for the subsequent years from 24-25. The limitations has been given. The penalty calculation has been changed, and it has been for willful default, for non-willful default, prior to issue of notice and prior to after issue of notice, everything has changed. This is a topic in itself. I would be sharing this PPT with you all, and you can go ahead with it. Everything has been considered in it, and you will be knowing that what are the impact of these provisions. Now, penalty provisions for appellate proceedings, the clarification has been issued in 75, and that is regarding the adjudication. When you go for 73, 74, or 74A, appellate proceedings in 107 and 112 would go on. Revisional authority, that is 171, that is for transitional credit. They had anti-profiteering. They had clearly said that the jurisdiction would be of the principal bench, that is the single bench at Delhi, and it would not be the jurisdiction of the state bench. Appeal filing timelines for the tribunal. The tribunal is still not there. We are awaiting. There was a recent judgment wherein by the Kerala, wherein it has been said that central government should appoint the members within 4 months, whatever it is. Now they had come out with the guidelines that they would, appeal timelines would start from the date they would notify. There would be condonation of delay in case the timeline is not required. But what is the wonderful thing? What they had done is they had reduced the pre-deposit condition from 20% to 10% of the disputed tax amount for filing of appeal to the tribunal. And that is really a wonderful the concessional benefit. So appeal filing timelines, e-commerce operator, only a minor amendment has been made. In fact, the amendment to section 122 1B changes the concept whether registered or non-registered e-commerce operator would be applicable. Now the best thing, 73 waivers, everything depended on it. It was decided in the 53rd GST Council meeting. That thing has come by addition of a new section 128A. And friends, the period is very important. That is 1st July 2017 to 31st March 2020. It is not for all the years. It is not for 4 years, 5 years or so. It is only up to the orders for the period up to 31st March 2020, irrespective of when the orders had been passed. So this is the one-time opportunity for the taxpayers, and it would cover all eligible notices and orders. The payment deadline would be notified, and it would be applied to the pending appeals and also to the writ petitions or other things, subject to the condition that you have to withdraw it before the notified date from the courts. The additional tax payable and other conditions would be notified, but there is an exclusion. What is the exclusion? That erroneous refund. In case there is a refund granted and the authority says that the refund has been granted wrongly, it would not be covered in this. And therefore, the erroneous refund has been excluded from the benefits, the amnesty which has been given for section 73 orders. Second thing is very clear, it is not applicable to 74. Third thing is, if you are a bona fide taxpayer, if you are a person who has paid taxes, who has refunded or who has reversed the amount through his input credit register or whatever, no refund of the paid interest and penalty. So that is what you have to understand. 140, transitional credit has been a bone of litigation. It has always been a bone of litigation. Earlier, the provision was that the input credit would be claimed only for the invoices which has been received later. But now they had done away with that because of various representation. Even AIFTP has given representation to it, and there whether the invoices are received prior to, on or after the appointed day. So for that also they would be allowing the credit. 171, these are the examination request definition of authority, a very non-consequential amendment. Insurance premium and reinsurance premium, I think most of us would not be covered with it or interested in it, so I would be skipping it. Tax paid on ITC reversed already for the 16.4, similar, no reversal of input. If you had paid the input tax credit for the 16.4 demand, no benefit can be claimed by you. If you had paid it, no benefit can be claimed by you. So the honest taxpayer always suffer, and that is what we are looking for it. IGST, again, there are some amendments. The amendments is different. Again, ENA amendment we had already discussed. It is synonymous to the amendment in the CGST, and therefore it continues with the thing. For section 6A, the notification has been said that in case of IGST payable on supplies shall not be paid. and refund of IGST on zero rated supply. Again, this is what we were saying, Rule 9610 of the CGST rules, read with the provisions of the IGST rules. That enabling provision is now coming. Whether it would be retrospective or not, and what would be the effect, and whether without a provision, whether the rule could have been made or not, that have to be seen. The appellate authority remains, I had already discussed, I would not be going with it, and the appellate authority limits has been revised with it. In the similar type of consequential amendments has been made to Union Territory GST Act. With this, friends, in the short time permitted to me, the major amendments which has come to the CGST, IGST and UTGST has been stated to you. The benefits are there. The government has come to the consequences, and the benefit is always you have to consider. I would be simply saying that these type of GST amendments, certain issues has still remained pending, and we would be looking for certain issues to be corrected, rectified, amended, changed very soon, maybe in the reply to the budget, and we would be waiting for it. With this, I would not be taking much time. I would be sharing this PPT in the chat box and thereafter sharing it through the WhatsApp group also. I am confident that you would be getting benefit of it. I am obliged to the central zone, my own zone, who has given me opportunity, the chairman, Mr. Navalka, Sandeep Agarwal, and my dear friend Anil Mathur Sahab, the past presidents, Ganesh Purohit sir, and others, and all, of course, the national president, Narayan Jain, and Mr. Kakra, the Secretary General, and the Deputy President, Mr. Samir Jani, and the active and vibrant Secretary of the Central Zone, Lakshman Kashyap. Thank you, friends, for giving me this opportunity and listening to it. In the short time of 4 hours, as said by Samir Bhai, I had tried to make the PPT and discuss the amendments and deliberate it with you. With this, thank you, everyone.
Thank you, sir. Thank you so much for give the brief of today's budget on indirect taxes in very short and brief. Friends, we will take the questions and queries in the end of this union budget talk. Now I request our respected national treasurer and today's speaker, Shri Anil Mathur sir, to kindly give his speech on the direct tax provisions. Anil Mathur sir.
Thank you, Sandeep ji. Respected National President Narayan Jain sir, Deputy President Samir Jani sir, Secretary of the Association in absentia Mr. Kakra, past Presidents Ganesh Purohit sir, IPP Pankaj Ghiya ji, Chairman of the Zone Navalka Sahab, National Vice President of the Zone Rajesh Mehta ji, Joint Secretary National Sandeep Agarwal, and today's person who is conducting this seminar, Secretary of the Zone Lakshman Kashyap, and my other seniors and fellow members. At the outset, thanks to the Central Zone for once again providing me this opportunity of trying to share, rather introduce the salient features of amendments made by the Finance Act 2024, Finance Bill rather, 2024. This is the first budget of Modi government 3.0 and 7th budget in continuation by Honorable Finance Minister Nirmala Sitharaman. Probably that is a record as far as India is concerned, that she has presented 7th consecutive budget, and congratulations and kudos to her. My special thanks to the participants also, because in the busy month of July, filing of returns, they have come in large numbers for this webinar. Thanks a lot to them. Friends, if you remember, about 33 years back in 1991, when Honorable Manmohan Singh ji presented the budget, it was also 24th of July. I mean, we are just a day ahead of that. As said by Pankaj, we have got very short time to prepare it. My apologies for if anything I miss out. I hope you will condone it. And congratulations to the Central Zone for starting this seminar on dot time. We have got this various proposals amendment in the Income Tax Act, which has been divided into 5 parts. The part 1 deals with the rate of income tax. Part B relates to measures to promote investment and employment. Part C is simplification and rationalization. Part D is widening and deepening of tax base and measures of NTI avoidance. And last but not least is the amendments relating to tax administration. Me and my learned co-speaker, Mr. Prasganth GS, Chartered Accountant from Bangluru, we have divided these parts amongst us. I would be taking up part A, rate of income tax, part B, measures to promote investments, and widening and deepening of tax base, and the other provisions and the financial aspects will be taken up by Prasganth sir. I would be sharing my presentation. I have tried to make a PPT of it. And just trying to introduce. Is my voice clear? And just trying to introduce what are the changes which have been brought about under various heads. I begin with the rate of taxes. I classified into the clause numbers of the budget. What are the relevant sections?
Sir, please enlarge your PPT.
PPT is not there?
Now okay.
Okay.
Okay, sir, go ahead.
Yeah. Yes. There are very few changes in the rates of taxation, excepting rates relating to the TDS and our new tax regime schemes. Excepting the changes in the TDS rates relating to 193(4) and all, and there are no changes in respect of the for the resident Indians. There are changes in respect of non-residents of foreign companies. The TDS in case of a foreign company has been reduced from 40% to 35%. And in case of TDS on capital gains as regards non-residents are concerned, there has been distinction between capital gains between the transfer which took place at the time of presentation of this budget and subsequently, that is from tomorrow. Well, if there are transfers, then there would be changes of the tax rates like this. The long-term capital gains refer to 115E, that is means investment and income from long-term capital gain, which was Ravi, please
let me check. Let me check.
Request the participants to mute themselves, please.
Please, all other requested to please mute yourself.
There has been a lot hue and cry about the changes of rate in taxation when the budget was specified in the budget was being presented by Honorable Finance Minister. So what happened that there has been changes in the rate related to the capital gains, but they are primarily in relation to the non-residents also. The first is your long-term capital gain is now from 10% has been hiked to 12.5%. And consequently, because of that, the section 112 would not be applicable because after the 23rd of July. So long-term capital gains in the case of equity shares and the mutual funds has been now enhanced from 10% to 12%. That is there. And long-term capital gains, not being a long-term capital gains happened in section 33 or 36 of clause 10. That means the mutual funds, those rates which were 20% has now been reduced to 12.5%. However, there's a change in rate of taxation on the short-term capital gain. From 15%, the rate has been hiked to 20%. There has been not exactly a change in rate of tax, but there is a shuffling of income slabs as far as the new tax regime is concerned. There were 6 slabs earlier. This scheme also contains the 6 slabs, but up to 3 lakhs is a nil. Earlier it used to be 3 to 6 lakhs. Now there has been changed to 3 to 7, 7 to 10, 10 to 12, and 12 to 15, above 15. With this consequential shifting of income slabs, it is estimated that there would be certain benefits to the persons who opt for the new scheme, and benefit up to 17,000 of rupees in tax can be achieved if somebody opts for the new scheme, which is now probably the default scheme. Then, in order to attract the continuity of the new tax scheme, there have been certain changes in the standard deductions and deduction from family pension. As we know that there are deduction up to 50,000 rupees for in terms of standard deduction under section 16, and section 57 provides deduction in respect of family pension income up to 15,000 rupees. These have been now enhanced from 50,000 to 75,000 in case of standard deductions, if we opt for a new scheme, and for a family pension, this has been increased from 15,000 to 25,000. These amendments are effective from 1st April 2025 and accordingly applicable for AY 25-26. The other change is in relation to the contribution towards pension schemes. As we know that section 36 provides a deduction of up to 10% of employees' contribution if somebody opts for a contribution towards pension scheme. This section 36 is being amended to allow the benefit of deduction from 10% to 14% of the limit. There has been enhancement in the limit, so section 36, which allows for the deduction, that limit has been enhanced from 10 to 14%, and section 80 CCD has also been amended. That earlier it provided that if the contribution of a central government or state government or any other specified, then there up to 14% of the salary, the deductions were available. From now, this limit of 14% has been made to all. So if the employee contribution up to 14%, for others is also covered for this. So these amendments are also effective from 1st of April 2025. So these were some amendments as regards rate of taxes are concerned, and as I think there is not in slide, but there is reduction in the rate of tax in case of a foreign company also, which has been reduced from 40% to 35%. So these are some of the changes as regards the rate of taxation are concerned, which I could find from the fine prints of the budget proposals. The other part that I have taken up for the changes for introduction is measures to promote investment in employment. As you must have seen today, that there was a lot of emphasis on generation of employment, particularly in the manufacturing sectors, because it has been felt that the service taxes is buoyant with the employment, but there were reduction in as far as the manufacturing centers are there. So there are some changes and some measures which have been introduced in this budget. Some of them may not be applicable for general practitioners like us, but these are related to tax incentive or International Finance Services Center. As we know, this country wants to set up certain centers which are as good as financial service centers in other countries like Singapore or maybe in London, which provide services to the non-residents and residents in any currency except Indian rupees. Like I think to my mind, the gift city in the Ahmedabad is also one of that. So there are certain changes which have been specified in these settlement schemes. These schemes, some additional things are retail fund and exchange traded funds which would be added to it. I'm not going to the details of it, but the one thing that I would like to just cover up is as section 68. We know that section 68 provides addition in case the explanation is not satisfactorily as far as the additions to the protection of funds has been made. There was an exemption in case of these introduction is from specified funds like venture capital funds. So if they are the addition to the funds on venture capital fund, then provision of section 68 were not attracted, because now you don't have to provide the Ghiya, because if it is the funds have been introduced from established funds, then no need to addition under section 68. Otherwise, you have to explain the chain. So the definition of venture capital fund is now also proposed to be amended and further enhanced. Section 10 would be there. So these are the two changes which have been made as far regarding international finance services are concerned. Section 94B is also regarding that also. Section 94B is for international taxation. This says that there is a restriction of a borrowed fund. Section 94B provides for a restriction on borrowed fund. And if the interest up to 1 crore of rupees is there, then the deductions are there. But if the interest amounts to more than 1 crore on the borrowed amount, then there was a restriction on 94B. This restriction is proposed to be done away in case of IFC as per section 94B. And accordingly, these amendments are effective from 1st April 2025. And the other important measure that has been introduced in this budget is amendment in section 56, clause 2, clause Romantic 7B. This, as we know, is for regarding if a private limited company, means a company other than means public are substantially interested, if it receives any consideration for issue of shares which exceeds the fair market value of shares, this excess amount was treated as an income of the company. In order to done away and encourage the investments and promote investment, a sunset clause has been provided to section 56 2B 7B and thereafter from 1st April 2025 25-26 provisions of section 56 to 7B would not be attracted whenever a private company receives investment in respect of issue of shares which exceed the fair market value as was impacted. And the other measures for promoting of investment and employment relates to tourism industry, as the Honorable Finance Minister had given a comparatively big time for measure for.
Sir, sorry to interrupt you. Prakash ji, why are you again and again unmute yourself? आप please अपने आप को mute करके रखिए, please. प्रकाश गुप्ता जी, अपने आप को mute करके रखिए, please. Everybody, please mute yourself. Listen to speaker. Please don't unmute yourself. Ravi, please change setting. Please change setting. When anybody join, nobody able to unmute himself, rather than the host and co-host. Okay, sir, carry on, please.
Yeah. So, in order to attract tourism, we have got a lot of domestic tourists as well as the foreign tourists. But this particular amendment has been brought for shipping industries and for the cruise ships. We know my joint secretary must have a privilege of having a cruise in Singapore or maybe Bahamas or Caribbean cruise, and most of the participants. So we all like that. So in order to promote this cruise ship business in India, there have been certain amendments made. These amendments are in relation to a foreign company and also for a scheme of a subsidiary and holding company, which needs to be a foreign company. So, Section 44 capital B was the earlier section in respect of a presumptive taxation of shipping business, which prescribes certain limit. Now, in order to encourage the cruise ship business, presumptive taxation regime is proposed to be introduced for non-resident persons engaged in the business of operation of cruise ships, along with exemption to income of foreign company from lease rentals if the foreign company and non-resident ship operator had the same holding company, thereby meaning that a non-resident person is operating as a cruise ship business. It has got a foreign company which may own the ship, and this cruise operator also pays lease rent to this foreign company. If the foreign company and this cruise ship operator both have this common foreign company, means they have got the holding company, then the lease rent paid by this cruise operator to the foreign company would be exempt from tax as far in the hands of the and as regards as the presumptive taxation is concerned, a new section 44BBC has been introduced, which deems a 20% of aggregate amount received, receivable or paid or payable by the non-resident cruise operator on account of carriage of passengers. This is in respect of if a non-resident cruise operator has to be a carriage of passenger, not cargo, as profit of the operator from business. Means 20% is the amount which is considered to be the deemed in. And there are certain other prescribed conditions which I am not going for this. As I said, the lease rentals paid by the first company, that means a company which runs a cruise business, shall be exempt in the hands of recipient company if such company is a foreign company, means that a person who is receiving the lease rent and paid by the cruise company, it has to be a foreign company, and the recipient company and the first company means the cruise company, they are the subsidiaries of the same holding company. Means what is the subsidiary company, what is the holding company has been defined, but if the cruise company and the person, the company from which the ship has been taken on lease, they are both the foreign company and the subsidiaries of the holding company, then these provisions of this section apply. New section subclause 15B in the definition clause 10 has been added, in the exemption has been entered for defining what is the holding company and subsidiary company in the explanation to this news clause. These because the business runs on a long-term basis, so this exemption for the initial period are available up to assessment date 2030-31, means for the next 5 or 6 years, these benefits would be available, which have been made effective from 1st April 2025. So these are the two things, one relating to rate of taxation measures and another was relation to the measures to promote investment and employment. Now come to the part of this is tradition every budget it comes, the widening and deepening of the tax base and anti-avoidance measures. We start with the proposals of taxation of buyback of shares. Friends, as you are aware, in earlier period, the dividend income and buyback of shares were both taxable in the hands of the company. Company was supposed to pay dividend distribution tax also and on tax on the buyback of shares also. Later on, the taxation of the dividend was changed and dividend became taxable in the hands of the recipient only. Similar provisions are now being made as far as the buyback of shares by a companies are concerned, because both the things are being made under one amendment only. So whatever the tax provisions in case of a dividend are there, they should also be applied in case of a buyback of shares in case of a domestic company. So the proposed amendments treat the sum paid by domestic company for the purchase of its own share as a dividend in the hands of a shareholder who receives payment from such buyback. The buyback amount would be treated as a dividend in the case of a, and this deemed dividend will be charged to income tax at the applicable rate without allowing any deduction of expenses. However, I mean, the question comes is what were the investment made by a person in at the time of purchase of shares. So that because now for the buyback, this asset gets extinguished. So this would be treated as a extinguishment of assets, and cost of acquisition of shares which have been bought back would be treated as a capital loss in the hands of a shareholder to be adjustable against other capital gains. And this capital loss can also be carried forward and set off against future capital gains from the sale of shares or other assets, like the carry forward they are available. These proposals, because of the buyback and everything, dividend, it mainly happens after the AGM or something like that. So it has been proposed that these proposals, amended proposals, are applicable from buyback of shares which have been made after the 1st of October 2024. From till 2024 October, whatever is the buyback, they would be subject to the old tax rate. There have been certain changes as far as the rate of SCTs are concerned, which we already know that the sale of an option in security, the rates have been enhanced. I've just tried to give it in a tabular form, that 0.06 to 0.1. For the case of future also, there are certain changes. Delivery based, there are no changes. And these are all proposed to be effective from the 1st of October 2024 only. The other change that has been made is regarding the treatment of letting out of property, residential or otherwise. What will be the taxation treatment? Some of us treat this as income from house property. Some take as income from profit, business and profit and gains. What the government thought was undue benefit is being taken if you treat this letting income from the letting out of residential out of part of house, then to income under that business and profession, undue benefit is being taken. So now this has been specified that the income arising on the letting out of a property would be taxable under the head income from house property only, and no other head of income would be available in this regard. These amendments are effective from 1st of April 2025 and accordingly would be applicable to AY 25-26. There have been certain changes as capital gains. Part of which are with me, and part important one are with because they fall under Chapter C, Section 48, which my Deputy President was also referring regarding indexation capital gains. So that would be Prashanji would be taking out. There are certain changes in Section 47 also. The transfers which are not regarded as a capital assets, transfers which are not regarded as a transfer. This is in relation to assets which are under the head by way of gift or will, and there was a proviso which says that the ESOPs would be out of it. Now it has been proposed that the ESOPs would all. What I have understood from this amendment, that the exemption which was not available to the ESOP, then now ESOPs would be also be treated as a not treated as a transfer, and it is also applicable from the same 1st of April. The other changes which news TDS provision 194T has been made, which deals with the TDS on payment to partners by partnership firms. It is a new provision, and it says that now it is proposed that the payments such as salary or remuneration or commission or bonus or interest to any account, including a capital account by a partner of the firm, would be subject to the provisions of TDS. What we, as far as the existing provisions are there, that such payments would not be subject to deduction of tax. But now there is a threshold limit. Any payment in individual or aggregate, if it exceeds 20,000 in any financial year, the TDS would be applicable on it, and the TDS rate as specified in this new section 194T has been made as a 10%. So there would be 10% TDS to the partnership firms which are now which are paying any, I mean, all partnership firms pay salary or remuneration or bonus in whatever form. So that would be also subject to TDS. The government is enhancing and widening the tax basis on the existing income or whatever there, but nothing new provisions are being made. And then 206C, which is specified as TCS, it has said that there would be certain enhancement to be made in this. It will come out. Then collection of tax on sale of certain goods, including motor vehicles, as we know that up to 10 lakhs rupees, exceeding 10 lakhs is there. So a scope of TCS is to be included, and that would be most probably in the hands of luxury goods. I think they have not been so far specified, but what has been said, as the Honorable Finance Minister has mentioned in a number of times, that there would be review up until 6 months period regarding various provisions. So I think it may come later on, as far as I could find it out. The another litigation area was regarding sale of immovable property where the consideration exceeded 50 lakhs of rupees. There was contention that in case of a joint owner, if each share of each person is less than 50 lakhs of rupees, then the TDS provisions of 194IA will not be attracted. So to done away with this confusion or whatever may be called, it is now proposed that the transfer of immovable property is referring to each individual's buyer's payment rather than the total consideration it was there. The proposed amendment clarifies that where there is a more than one transferor or transferee in respect of any immovable property, the consideration shall be aggregate of the amount paid or payable by all the transferor or to the transferor of all the regarding property. Then that by meaning thereby, the value of property is now the paramount rather than the number of holders. If there are property of more than 50 lakhs of rupees, there are two owners, each claiming that my share is 25 lakhs. So the provisions of the TDS of 194IA should not be applicable, has been done away. Now, what is important is paramount for importance is the value of property which is supposed to be transferred irrespective of the number of transferors or respect of the number of transferees. There is some amendment in floating rate saving bonds, which is, and sorry, this amendment is also effective from 1st of October 2024, not with the immediate force. There is certain changes in computation of income in case of life insurance corporation, which says now the reduction of expenses of business other than LIC would not be allowed. So there would be deductions only in respect of that would be covered. And taxes, inclusion of taxes withheld outside India, there are certain amendments to that extent. The section 198 has been proposed. These are not of much use to us, so I'm trying to just skipping them. Then there is another clarification thought that there has to be some distinction between TDS rates as far as 194C and 194J are concerned. Now, normally what we find is that on the same type of payments, either 194 people deduct at 194C, or maybe in some cases of 194D, means for the contractors or fee for professional technical services. Now it has been said that the 194J does not constitute any work. So if it is for the purpose of specifically for professional technical services, then the TDS has to be under section 194J only and not in respect of 194C. So these amendments are also effective on 1st of October 2024, and accordingly section 37 would take care of this. Now, Section 34 has also been amendment and tries to distinguish between settlement payment in respect of any expenditure incurred by assessee for settling an offense which is prohibited by law. Means if you do anything, any settlement in respect of a business which is not allowable under law. Earlier we say and there are certain cases which we can say are not permissible, which are not permissible under law, but we could tend to take the benefit. But now it's like if any expenditure, any purpose which is not allowable or prohibited by law, if you do any settlement expenditure, these would not be allowed, and this is in respect of assessment year 25-26, effective from the 1st April 2025. Then there is a change in method of valuation of shares acquired through OFS. That is means determination of fair market value in case of unlisted companies. There is change. The grandfathering rule would be now applicable. Amendment has been made to Section 55, which describes the provisions of valuation of assets. Now, it's like earlier, a couple of years back, the grandfathering date as far as listed companies was there. So this, to some extent, is also then the value as on 1st April 2018 would be taken, and then it will be recalculated as per the provision of Section 55. There is a chart which has been enclosed in the proposed amendments, which I'm not taking up that because this probably in my presentation, that is the only retrospective amendment that I could catch on this, because now this would be effective from assessment year 2018-19. I don't know what would be the fate of such transfers which have been made prior to that. So these I have tried in brief to cover up the amendments which I have taken up myself. My apologies if something has been misinterpreted by me or I have skipped, because I have relied upon the presentation by myself and my team, and no outside agencies, no technology help has been taken by me. So with this, I hand over back to Sandeep ji, and I request if I have skipped out anything, Prashant ji, you can cover it up. Thank you, and to everyone.
Thank you, sir. Thank you very much. Now I request, without taking much time, I request our second speaker on direct tax, learned person, young man who's always accept our request of Central Zone, Prashanth ji, to kindly deliver his address. Prashanth ji.
Yes. Thank you, Sandeep bhai. At the outset, I thank AIFTP Central Zone for having given me this opportunity to share my views on the proposals in direct tax in Union Budget 24-25. We are indebted to our parents for life. We are indebted to our Guru for the way we live. I take this opportunity to place on record my deep sense of respect and gratitude to my mentor, CAS Venkatramani, who has been a guiding force and factor in my endeavor of profession. Also, respects to CAD Devraj and CAA Shankar, who have mentored me at various stages of my professional career. Now, to stay beside and set the tone down, firstly, the first 5-10 minutes, I was not available on the call. I logged in, but subsequently, I went out for a TV debate. So I don't know whether as Mathur sir and me had discussed, some brief highlights of the economy also Mathur sir had asked me to present before I go on to the direct tax proposals. Mathur sir, has the economy portion been done, or should I take 5 minutes to bring that?
You can take. I have not.
Yes. Now, coming to this budget 2024-25, and yes, there have been divergent views as regards the budget and why it has come out or how it has come out, and the political ramifications, so on and so forth. Be that as it may, if you look at the macroeconomic level of the budget size now is 48.21 lakh crores, which means in the last 10 years, the economy has grown more than thrice. In 2014, the number was about 15.6 lakh crores, and we are at 48.21 lakh crores now. It means it's a tremendous growth which we have witnessed in the last 10 years. And the fiscal deficit now is expected to be about 4.9% of GDP. Though, as per the FRBM Act, 4% is the most ideal number to be at, considering that what we went through COVID and the economical challenges that as a large country as India we have got. And for the fact that only 8 crore are taxpayers in a 144 crore population. And out of that 8 crore, if you further tame it down to number of people who pay effective taxes, and if you fix a number to it, say more than 50,000 or more than 1 lakh, the number really dwindles down, which means probably a few lakhs of people through whose tax money the welfare for the 140 crore people is being carried out. And now, what is this budget got in store for various sectors? The emphasis has been on the capital expenditure, wherein the proposal is to spend 11 crores, 11.11 lakh crores, which translates to roughly 3.4% of our GDP on capex. And all of us are aware as to how this capital expenditure works, wherein when you spend on the capital items, there is something called a capital multiplier effect, the capex multiplier, which means the return on capital employed, probably say at the end of 5 years or 7 years, 1 rupee what you spend today would be worth easily 5 or 6 rupees in 5 to 6 years, which means that is why it needs to be, we need to spend for the capex. And coming to the different sectors which were focused on, one definitely was the agriculture and the allied sectors there, because primarily we continue to be an agrarian economy, and therefore about 1.52 lakh crores has been earmarked for agriculture and related activities. And education and skilling has been given due importance, because we understand that skilled workforce is the need of the day, because when you have technological advancements coming up through AI and other modes, the graduates who come out of after higher education need to be employable. So therefore, they need to have that, possess that specific skill sets, and therefore about 1.4 lakh crores has been earmarked for higher education and skilling. And what do we have in store for MSMEs? We have a credit guarantee scheme to facilitate loans to MSMEs without third-party guarantees. And this is up to, they want to cover up a majority of the MSMEs coming there, so that the MSME sector is really boosted up. And for small entrepreneurs who are availing these Mudra loans, the limit has been enhanced from 10 lakhs to 20 lakhs. Of course, you'll have the condition saying you must have repaid the previous loan, so on and so forth. But the eligibility criteria also, and the enhancement is for up to 20 lakh. Then you have the e-commerce export hubs, which the proposal is to make in private-public partnership mode to enable MSMEs and traditional artisans to sell products in international markets. See, we know how diverse as a country we are, and how each, I would say in AIFTP language, each zone in India has got. So how diverse the products are, and how different the culture and tradition is in different zones. So therefore, you can consider that. And therefore, if all the products belonging to different geographical locations have to be sold in international markets, definitely it requires a boost up, and which is what is being done through e-commerce export hubs. And you also have the internship opportunities. This has to be clubbed in with how the skilling opportunities to be given. For about 1 crore youth spread over a period of 5 years, internship in top 500 companies, which means for a period of 12 months, they would undergo internship in one of the top companies. They will be hands-on in terms of how those companies function and what the skill sets they're supposed to acquire. And of course, it's not coming free for them. They will be paid a stipend of 5,000 per month, apart from initially them getting 6,000 as a one-time allowance. You also have the different schemes for employers also. 1 month wage subsidy for first-time employees entering the workforce, which benefits about 210 lakh, that is 2.1 crore youths. You also have the support for employers to increase employment with a reimbursement of up to 3,000 per month per additional employee. Of course, the salary cap is fixed at 1 lakh rupees. To set up women's work for separately special help groups, self-help groups, crushes, and women-specific spinning programs, because one of the initiatives of this government has been emphasis on Garib, Yuva, Annadata, and Nari Shakti. And therefore, the women welfare takes a precedence in most places. And they also want to have a centrally sponsored scheme to skill 20 lakh youth for 5 years and to upgrade 1,000 industrial training institutes. To have inclusive human resource development, which means to have, by adopting saturation approach, comprehensive social justice through various programs, including education, health, targeting farmers, youth, and poor, and having the PM Vishwakarma Yojana, PM Swanidhi, National Livelihood Mission, and Stand Up India. And again, the Look Northeast policy of the government, saying that Purvodaya plan, wherein to focus on the eastern region. And we know what eastern zone in AIFTP is. So the development of eastern region covering Bihar, Jharkhand, West Bengal, and also special emphasis to Odisha and Andhra Pradesh being given for HR development, infrastructure, and economic opportunities. This also takes us to the Vikas and Virasat scheme of the government, wherein to blending development with culture, to have industrial corridors, and like the Kashi Vishnunath corridor, they want to have a Vishnupad corridor and also a Mahabodh corridor, which will also improve tourism, economy at the same time in line with Vikas and Virasat. We also have, through urban development, emphasis is on the energy security and infrastructure development, because through the PM Surya Ghar Muft Bijli Yojana, you also have the nuclear energy funding for research and development in that, because of course we know how it has been moving forward. And in so far as the FDI is concerned, simplified rules, we've also seen already in the income tax as to how the angel tax has been removed now. Similarly, to have simplified rules for FDI, and most important thing is to promote the Indian rupee as a currency for overseas investments. And what is in for the parents to save? They're bringing in NPS Vatsalya, which will allow contributions by parents and guardians for minors, convert into a regular NPS upon reaching adulthood. We also have the special emphasis for Bihar, Assam, Himachal Pradesh, Uttarakhand, and Sikkim, who were recently devastated by floods. And especially for Bihar, about 11,500 crores has been earmarked. So this is in a nutshell as to what has happened in terms of how under different sectors the economy is growing. I've not gotten on to a lot of other details as to startups for vegetable storage, natural farming for initiation of for 1 crore farmers. There are a lot of agri-related things which are available. Now, let's move on to the core topic of the day, onto the direct tax proposals. And like how me and Mathur have discussed, I'll be taking part C, which is simplification and rationalization, and part E, dealing with tax administration. Now, as luck would have it, under class C, which I selected, one of the first things that has come out in the memorandum is about simplification and rationalization. The most important thing is it starts with introduction of block assessment provisions in case of search under 132 and requisition under 132A. For a subject which is very dear to me, search, that takes precedence here. Now, to give a impetus as to what has happened, we had different regimes under search. There is always what we hear from our parents, seniors, saying that if you do what your grandfather's father did, or if you reasonably emulate what your grandfather did, you will be successful. I think now that's that time of which arrived, because we had a special code in itself called Chapter 14B in Income Tax Act up till 2003, May 31st. Then you had the 153A to 153D regime till 2021. Then from 21 onwards till this present budget, you had search assessments as part of reassessment under 148 and 148A. And now they have gone back for such assessments to Chapter 14B as a separate unit, which means it's a separate code in itself. They have substituted the erstwhile provisions which were available, which were there, with new ones, starting with 158. It starts with clause 49. Clause 49 of the bill. Unfortunately, like my other seniors in the profession, Ghiya ji and Mathur ji, I have not prepared a PPT. In fact, they have moved on with technology, but I'm still stuck with papers, and I'll be reading out with from the finance bill, because I was marking when it came up, and I had other engagements to be part of it, so I couldn't do the PPT. Nevertheless, I'll try to put forth my views on that. Chapter 14B is a special procedure for assessment of such cases. It will be a separate code in itself. The most important definition that we have to understand now is it will be a block assessment, because under the 153A to 153D and under the 148A, 148A regime, you had each assessment year being treated as a separate unit of assessment. But most seniors in the profession would know that was not the case prior to 2003. Prior to 2003, it was a block period and a block return under the erstwhile, now substituted 158 BC and BD cases. Now, what is a block period? Block period means a period comprising previous year to 6 years. Now, look how it has gone ahead. The earlier 158 BC BD cases prior to 2003 was for 10 years. 153A to D brought it down to 6. Then subsequently went up to 10 for a brief period before the Finance Act 21 amended the entire 153. For a brief period of 2 or 3 years, 153A was also for 10 years. Then under 148 regime also, they continued the 10-year regime, saying that 3 years will be mandatory assessment, and from year number 4 to year number 10, based on the income or documents which reveal existence of more than 50 lakhs of income. Which means, by and large, after 2003 till about 2017, you had it only for 6 years, and from 2017 onwards, you had it for 10 years, but with different conditions. Wherein you will have it for 6 years, but year number 7 to 10, and later on, for the last 3 years, you had it only for 3 years, but year number 4 to 10, documents should have revealed more than 50 lakhs income escaping assessment for you to warrant a notice under 148 or 148A for such. But now they've gone back to the old ones. But instead of the 10-year period, which was erstwhile existing under the 158 provisions, they have come back to 6 years. Now, block period will be a period of 6 years preceding the previous year in which a search was initiated under 132 or a requisition under 132A, and also includes the period starting from 1st of the April of the previous year in which search was initiated. Which means if a search is initiated today or say tomorrow, 6 assessment years before this, and the period from 1st April, say to 23rd July, will be construed as a block period. So the block period will not necessarily be only a period of 6 years, but it can be 6 years and a maximum of 6 years and probably 364 days. If the search happens to be on the 30th of March of any year, that period also will be counted, which means a block period will necessarily be 6 years plus the number of days starting from April 1 till the date of search in that relevant previous year. And what is the tax upon? They have gone back to section 113, which was there earlier. You also had this retrospective amendment case, Vatika Township to say, whether surcharge was leviable or not. Now, under section 113, it is 60% which they are wanting to tax. It is under clause 43. Clause 43 of the bill talks about, in fact, sorry, clause 32 of the bill talks about section 113, which provides for a rate of 60%. Wherein the 113, the erstwhile 113, before it was, which has been brought back now, the erstwhile 113, it was the total undisclosed income of the block period determined under section 158 BC shall be chargeable to tax at the rate of 60%. Luckily, what had happened, because 158 BC and BD were removed, 113 was not altered with at all. Now 113 continues to be there, and they only removed the word undisclosed income there. So it continues at the rate of 60%. Now we'll get back to 158, how the search happens. And you also have the undisclosed income, which includes any money, bullion, jewelry, valuable article thing, etc., etc. Yes, by and large, as to what was the undisclosed income and assets, what we would have found during the course of search. But one important timeline would be, when I spoke about block period, from the first day of April of previous year, when such an initiative requisition made, and ending on the date of the execution of the last of the authorizations for such search or acquisition. So, you also have an explanation for that to say, in case of search, on the conclusion of search, as recorded in the last Panchanama drawn in relation to any person in whose case a warrant has been issued. It's very important now. It is not enough if merely the dates are noted. We have to know the last Panchanama which is there, and based on the last Panchanama, the time limit will be brought about. Now, next you have 158BA dealing with the time frame. It starts with saying after first day of September 2024. So till August 2024, we will continue to be governed by the erstwhile provisions, and only from 1st September 2024, we will get on to the new regime of search assessments, or we'll go back to the roots in search assessment in the chapter 14B. And they also brought in reference to 92CA, which erstwhile was not there, or it could not have been there because 92CA came in much late. You also have a provision wherein they talk about the pending assessments will abate under 158BA2, because if the assessment or reassessment or computation so and so is for, if any pertain to any assessment is following the block period is pending on the date of search, then all of that shall abate, which means it might have been an advanced stage also, even then it shall abate. All pending assessments which were open shall abate, and the block period will continue to be assessed as one. And as per 158BA6, the total income other than undisclosed income of the assessment year relevant to previous year in which the last is made shall be assessed separately in accordance with other provisions. So you will have a separate assessment for undisclosed income, and they will compute your tax liability. Because in so far as undisclosed income is concerned, the rate of tax will be different. The penalty under 158 BFA will be there. And for other income, because when you talk about 158 BA7, it is the total income referred relating to the block period shall be charged to tax at the rate specified in section 113 as income of the block period, irrespective of the previous year or years to which such income relates. So it doesn't matter to which year it relates, but the entire block will be treated as one, and the rate will be 60%. And the detailed provisions are given in how you compute under 158 BB the computation of total income of block period. It has to be computed as per 158 BB subsection 2 when it talks about the income shall be computed based on evidence found as a result of such a survey or requisition or other documents and other such materials and informations as are either available with AO or come to his notice during the proceedings, which means it gives us a scope to say whether the concept of addition based on incriminating materials exists here. In my opinion, yes, because the section is very clear saying that the undisclosed income falling within the block period as per 158 BA1 shall be computed in accordance with the provisions of this Act on the basis of evidence found as a result of search or survey or requisition, which means it must primarily pass the test of the evidence being found out as a result of search or survey or requisition, and only then it will be treated as an undisclosed income. So that litigations, I think, in that line will continue to erstwhile there, which will again resurface. And of course, they will have how will you determine undisclosed income? (68, 69) A, B, C, D, A, C. So far as may be shall apply, and references to financial year in those sections shall be construed as references to relevant previous year falling in the block period. So notwithstanding that it speaks about individual year, under the block assessment regime, how it comes back and says that it pertains to the block period. And one important thing is, you will not have set off or brought forward of losses prior to the first previous year compliance block period or unobserved depreciation of 32(2) against undisclosed income. But you may carry it forward for set off in the previous year subsequent to assessment year in which the block period ends. For the remaining period, you can take it for, which means when you compute the undisclosed income, you cannot claim set off of carry forward losses and unobserved depreciation both. A detailed assessment procedure has been given in 158 BC and BD, because I think if I take those provisions, I will have to only stop at 158 BC, BD and BFA. Instead of that, probably I'll also move to what 158 BFA talks about in terms of the penalty before moving on to other sections, because this itself is a section which requires a 2 or 3 hour deliberation. 158 BFA talks about the penalty, levy of interest and penalty in certain cases. 158 BF talks about an important facet wherein no interest under 234 ABC or penalty under 270A shall be levied or imposed for the undisclosed income assessed or reassessed. Which is why, though 234 ABC have been held to be mandatory as per the Supreme Court judgment in Anjum Gaspara 252 ATR 1, now there's a specific exclusion here in 158 BF to say for computation of undisclosed income, on that there is no interest which is payable. The reason is, for the entire block period will be paying at the rate of 60%, so there is no further interest which is warranted. And you also have 158 BFA1 penalty. It talks about if you don't pay up the interest, it's 1.5%. They charge you interest, and the penalty would be under 158 BFA2. The AO or CAT appeals may direct the person shall pay by way of penalty a sum of 50% of tax available in respect of undisclosed income under 158 BC. So if your undisclosed income is 100, 50% of tax so leviable in respect of undisclosed income. So 100 rupees is undisclosed income, 60% is a tax on that. So 50% of that, 30 would be the penalty in terms of 158 BFA2. In effect, you would have coughed up 90 rupees out of the 100 undisclosed income as tax and penalty here. And they also talk about 271AA-D or 271D or 271D or E shall not be made if you have furnished return under 158 BC. And that appeal is not filed against that assessment for part of income which is shown in the return. So therefore, you will have a separate scheme, and you also have under 158 BFA 3 for penalty as to who can impose it. DC, where amount of penalty exceeds 2 lakhs with the prior approval of the Joint Commissioner and Joint Director, as the case may be. It still continues on to a lot of other things, but let's move on to the other important amendments which partake in clause C of the memorandum. We will move on to the time limit for filing the appeal under clause 78 dealing with 253 section. Earlier, appeal to tribunal, there was a time limit of 60 days. Based on representations, the department has given representation saying that we pass orders on different dates and we are not able to keep track of each single day for appeal. So therefore, they have brought it out to say 2 months from the end of the month in which the order is passed, so that they know all orders passed in the month of April will be liable for to be filed, say April 1, even then 2 months from the end of the month in which the order is passed. So by June 30th, they know that they have to file the appeals. So for all orders passed in April, they know that the due date is June 30th and they want to plan accordingly. So I don't think we have any negative comments to offer insofar as the time limit is there. Withholding of refunds is one thing which was happening under clause 83 dealing with section 245. The clause 83 was dealing with 245. 83. Clause 73 talks about clause 73 talks about 245, wherein they talk about they have brought in a particular thing to say, which was earlier speaking about that the grant of refund is likely to adversely affect the revenue. Is there? Luckily, they have removed that particular thing because there was 2 requirements which our officer was supposed to fulfill. He has to form opinion that the grant of refund is likely to adverse the revenue, and that he has to record the reasons. Now, he is not supposed to, he has to only record the reasons in writing, but it is not to be brought out as to, in his opinion, that it is likely to adversely affect the revenue. In a way, anyway, it is the revenue empowerment model to say adjustment of refunds. We have less to ponder about what benefit we have gathered there in terms of 245. We move on to the next one. One important amendment which they have brought about is under the charitable institutions. You had 2 regimes, 1023C and section 11 and 12. So there was, and a couple of years back, amendments were brought in certain sections to say to have a bonhomie between 2 sections, and that if you are registered or exempt under one of the regimes, you could not have claimed the benefit under another. So 11 subsection 7, everything was there. It was high time that it had to be rationalized to say both the regimes, that is 1023C and section 11 regime, work in tandem. So therefore, the emphasis is for the first regime will gradually transit itself into the second thing. And after the first day of October 2024, you cannot file under 1023C. And before that time, what you file will be processed in accordance with 1023C that exists till the 1st of October. And all those trusts and institutions which had got approved on 1023C, till the approval date ends or the expiry of the period, they will continue to be approved under that section itself. Which means if they've been approved till 27 or 26, or depending on how they have taken up registration, when they finally apply for renewal, they will automatically come under the new regime.
किसका है क्या मतलब
Please mute yourself. Please mute
अच्छा ये
yourself.
मूंगफली अरे यार ये सही है तो मूंगफली
Carry on, Prashant ji. Carry on.
Okay. And you also have under the clause 8 merger of trusts under the exemption regime with other trusts. So you also had wherein trusts merge, it could have attracted chapter 12 accretion of tax. Now the conditions which have been prescribed now, if they are complied with, it will not lead to accretion of income under 115 TD, because all of us know 115 TD was a draconian provision, continues to be draconian in nature. So therefore, certain merger of trust will not get yourself the rigors of 115 TD. Now, one probably amendment which shook the markets and investors and which gave divided opinions as to what's right, what's wrong, was the holding period for short-term assets and consequently the taxation of that. The beneficial thing was the holding period now is uniform. Anything for listed securities, it is 12 months. All other asset, it is 24 months for it to be treated as long-term. Whereas for short-term capital gains under 111A, the taxation was 15% under 111A. Now that's been increased to 20% for transactions after 23rd July. That is, even on 23rd July, if something has taken place, it will be taxed under 111A at the rate of 20%, because in the amendments in 111A, they talk about bringing two links saying 15% on or before 15% before July 23rd and 20% they say on or after 23rd July. So even if somebody has sold shares today after the budget, and assuming they knew what was coming in, and even if they sold before the budget was tabled also, the rate of tax for short-term capital assets should be 20%. And one other thing is, the long-term capital gains now has been increased for listed securities, which was 10%, it's gone up to 12.5%. With the exemption cap, it was there at 1 lakh, increased to 1.25. But the thing is, for all category of assets, now it is 12.5%. But the devil is in the detail, my friends. When we talk about indexation benefits, when you talk about the second proviso to section 48, when they're talking about the second proviso to 48 is proposed to be removed, which means for property, gold and other unlisted assets which you could have, leverage your cost of acquisition by having an index cost of acquisition will no longer be available. Though the rate might have come down, the indexation benefit is no longer applicable for them, other than for non-residents having different assets. But for resident individuals, the indexation benefit, which was translating into huge benefits for land, which were land and assets being held for considerable amount of time, now that indexation benefit has been removed. Therefore, by and large, you'll have a parity in taxation between resident and non-resident associates. Maybe one of the non-discrimination clauses in one of the DTAs might have triggered this particular onslaught of tax, I would say, because it's a tax in different form. When you're not giving me additional cost of acquisition by indexing it, the assessees will end up paying more taxes. TDS rates, a lot of them I think Mathur sir has already discussed. But nevertheless, for certain categories of TDS which were under the erstwhile regime at 5%, now they reduced it to 2% for payment of insurance commission under 194D, for LIC under 194DA, that is life insurance policy, on lottery tickets, commission of brokerage, payment of rent by individuals and HUF who otherwise are not liable to deduct tax under that section, and for contractual payments which are outside the purview of a business income, which means somebody who's not in business or profession not deducting tax at source, for them, the rates have been brought down to from 5% to 2% with effect from 1/10/2024. For 194D, it is from 1st April 2025. And in fact, TDS for by e-commerce operated payment of certain e-commerce participant has been reduced from 1% to 0.1%. It's a substantial dip, but they've realized that 194 also had 206 coming in, and the seller was collecting TCS, and it was also resulting in huge refunds because if they were running into losses. But nevertheless, under 197, even 194Q also has been brought in now. They can also apply for lower deduction of tax. I think 194T, sir, has already covered. And under 206C, under clause 70, for claiming of credit for TCS of minor in the hands of the parent, which was not there earlier. Because how will the minor get a TCS? Because generally it's for trading in alcoholic liquor, forest produce, scrap, etc. But for the funds remitted under the liberalized remittance scheme of the RBI, it might have been remitted in the name of the minor, which means TCS should have been collected under 206C1G. And the parents or the guardians did not have a provision to claim it in their return. So therefore, now the board will notify the rules where credit of tax collected can be given to other persons also or other than collectees. And also, obviously, a safeguard measure is that the TDS credit will be applicable or available to such of those parents in whose hands the minor income is being clubbed. It should not so happen that the tax-paying parent claims the TCS credit and the non-tax-paying parent clubs the income and ultimately also doesn't pay taxes. That should not happen. So, therefore, for delayed interest payments for government accounts of TCS from 1/4/2025, it is from 1%, it's increased to 1.5% to every month or part thereof on such sum from the date on which such tax was collected to the date on which the sum is actually paid. It is by and large alignment of provisions with respect to 201(1)(a). 206C7 corresponds to that particular provision. And going back to section 80G and how it happened, for processing of applications by the PCAT or CAT, you had the time limit was within 6 months from the end of the month in which application was received. Now, 6 months from the end of the quarter in which application was received. This again is in alignment with how the sections dealing with 12 and 1023C were worded earlier, and the time limits there. So they've rationalized those time limits there for 80G. Now we will go to 148, that is clauses 44, 45, 46, and 47 dealing with reassessment. Clause 45. onwards. They've substituted 148(1) for that. Now again you have newer time limits here. Under 149, now you have between 3 years to 5 years. This is what is the thing, because under 148 regime, what was happening? You had information which suggests was the position of the officer, and they had to give. Now, whether that reason what the officer had got, we're not talking about the reason to believe in the old regime of 148, but even that information which suggests that the income chargeable tax and escaped assessment. Now, by virtue of amendment in the Act itself, they're providing that where the assessing officer has got information which suggests that income chargeable tax is escaped assessment, he shall, before issuing any notice, provide opportunity. It is already there. And such notice now shall be accompanied by the information which suggests that income chargeable tax is escaped assessment. Which means you are cutting down one step, wherein once you issue a notice, then assessee would have sought for that and then filed objections. Now it's mandatory that along with that show cause notice, he also gives you the basis on which he has come to the conclusion. The more important facet would be under 149, no notice under 148 shall be issued if 3 years have elapsed from the end of the relevant assessment year. And for in which of such of those cases were beyond that. But now you have a new timeline, which was earlier not there at all. You have a 5-year timeline now. We have never had 5-year timeline under 148 also. You had 4 years and 6 years. You had 6 and 10. You had 7 to 10. You have 6 now. You had 3. Now under 149, 149(1)(b). No notice under 148 shall be issued for the relevant assessment year if 3 years and 3 months, but not more than 5 years and 3 months have elapsed from the end of the relevant assessment year, unless the AO has in his possession books of accounts or documents or evidence related to any asset or expenditure transactions which show that the income chargeable to tax has escaped assessment. So therefore, now you have a new time limit of 5 years under 148 and 148A. You'll have 6 years under 148 BCBD cases or 158A under Chapter 14B. So there have been, though Finance Act 2021 amended 148, and they thought that the disputes under such cases will come to an end. Probably the new 148, which probably was there for the shortest period, only for 3 years, which encompassed within its ambit such cases, probably has not lived up to its expectations of trying to bring down litigation in reassessment and search. Therefore, I believe they've gone back to the old regime taxation in search. And here is a benefit to the taxpayers to say, okay, we will not come after you for 6 years. 6 years is for such cases. For regular reassessments, it's a maximum of 5 years. And you'll have certain consequential amendments also as part of that. You also have other amendments which come in the tax administration. Most important thing is the Vivad Se Vishwas Scheme 2024. The highlights of that, because that scheme itself will be large enough, the highlights are that they have brought in 2 facets. If the taxes are paid before 31st December 2024 is one limb. The second limb is paid on or after 1/1/2025, but before the last date. Fine. Even under that, you have 2 subclasses. One, if the whoever is declarant in the Vivad Se Vishwas should be an appellant and the appeal proceeding must be pending as on date, that is 23rd July, it must have been pending, which is the specified date is the 22nd of July. So if the appeal was pending as on 22nd July, they could have gone in. And what will they pay? They pay the disputed amount of tax within 31st December 2024. And from 1st January 2025 onwards, they pay the disputed tax plus 10% of disputed tax for not having paid earlier. But you also have a separate subcategory in that. Definitely the appeal is pending on the specified date 22nd July, but he becomes if he is a declarant whose case was existing prior to January 2020, that is when the Vivad Se Vishwas 2020 came in. For him, he can't merely pay the disputed taxes, he has to pay disputed taxes and 10%, which means, look at it in the normal way, case pending after 2020 up till 22nd July 24, you pay 10% or 10% tax plus 10% of that if you make a delayed payment. But if a case was pending as on 2020 January and you had not chosen to go for Vivad Se Vishwas then, and now you want to avail the benefit in the present regime, you will pay 10% of the disputed tax. First you pay the disputed tax and additionally you pay 10% of disputed tax even before 31st December. And if it is after December 24, you'll pay along with disputed taxes, you'll end up paying 20% of that.
Prashanji, 5 minutes or more, please.
Only 5 minutes, is it?
Yeah.
Okay. So one other important thing is the amendments for under the Black Money Act, because it many people had reported that they had small amount of assets, or they were employed elsewhere, or they were employed in a foreign country, or they were employed here, had a bank account in a foreign country. It became a foreign asset and non-disclosure was resulted into huge penalties. Now, ultimately, if the overall asset value is less than 20 lakhs, other than immovable properties, the 42 and 43 of the Benami Black Money Act 2015 have been amended so that genuine mistakes for not furnishing those details earlier now have been taken care of. One of the important thing under the Benami law is that for a Benami da, if he accepts and turns approver subject to the conditions, he will not be prosecuted. He will not be asked to undergo the imprisonment because they are now wanting to give him full immunity by introducing section 55A under in the prohibition of Benami property transaction, because as per the existing 53(2) of the Benami Transactions Act, it was the offense of Benami was punishable with penalty of rigorous imprisonment from 1 year to 7 years, along with fine extending to 25% of the fair market value of Benami property. So, which means the Benamidar will never come forward because they might have been people with nominal means. So, therefore, now if he turns an approval and the conditions are satisfied, he will be given compute immunity from prosecution and penalty for having come forward so that they will be able to collect the actual taxes from the defaulting persons. Now you have you can cover now. Equalization levy, which was brought in by Chapter 8 of Finance Act 2016, which had a 2% for the e-commerce operators also. Now, it shall not be applicable to consideration received or receivable for e-commerce supply on or after 1/8/2024, because you also have 10 subsection 50 which was brought in and the amount is not chargeable to tax there. Equalization levy, I think by and large we can say that it's now been removed. And then we have rationalizations in terms of TDS prosecutions for the delayed payment of TDS. Now, if the TDS is paid in respect of a quarter to the central government on or before the time prescribed to filing the TDS statement, which means for say for the quarters April, May, June, before the time prescribed for filing the TDS statement for say June, if it's July 25th, if the TDS for the month of April and May and June has been paid before July 2025 or July 31st, as the case may be, prosecution cannot be even launched. It was so happening that even for minor defaults and delays, prosecution was being launched. Now they want to rationalize by amending 276B. You also have the widening the ambit of 200A for processing of statements, where there are certain forms like 26QF, which is filed by the exchange where deductee is filing the details of the tax. So they want to introduce a new section to provide that the board will make a scheme so that if you're not a director also will make a scheme so that the ambit of 200A is extended. Correction statements under TDS and TCS, people were filing because there were no time limit specified under the act. It could have been filed at any time. People were misusing it. Now you have a time limit of under 200 and 206C3B. You cannot file it correction statements after the expiry of 6 years from the end of the financial year in which the statement under 200 or 206C are respectively delivered. So I think by and large we have tried to sum up. There will be many more amendments, many more subclauses to be discussed, debated, subject to different interpretations. But under the within the time allotted to me, I think I have tried to bring out what amendments have happened. Anyway, I'm sure that we'll have detailed discussions in the days to come, and we'll have detailed deliberations on clauses to ensure better understanding of the provisions. Now, thank you all for a very patient hearing.
Thank you, Prashantji. I'm sorry because it is not possible to complete this all provisions, because I know the budget is too huge, and I am assured all the audience that in the first week of August we will organize a 2-3 days webinar series to discuss the point by point to point budget discussion on direct taxes and indirect taxes as well. Now I request our respected past President Shri Ganesh Purohit sir for his concluding remarks. Ganesh Purohit sir. Sir, are you there? I think sir left. Okay. Purohit sir, are you there, sir? I think he left. Okay, now I request General Secretary Lakshman Kashyap to give vote of thanks.
Thank you, sir. First and foremost, I extend our deepest gratitude to our esteemed guests and seniors for gracing us with your presence today. A special thank to our distinguished speakers, Sri Anil Mathur ji, Pankaj Ghiya ji, and Prasganth ji for sharing their valuable insights and in-depth analysis of the Union budget. We truly appreciate the time and effort you have taken to prepare and present such an enlightening session. I would like to thank all the participants. Your participation have made this webinar interactive and enriching. Thank you all.
Thank you all again. Keep joining us. We are regularly organizing. Central Zone is famous for organizing webinar series regularly. And I'm assuring you, read this budget amendments and we will available with the experts to resolve your queries. Today, we will not take so much queries. First, after 2-3 the first week of August, in the month of August, we will have a special sessions for queries of our listeners. Thank you all. Thank you very much. Keep joining us. Namaskar.
नमस्कार, बहुत अच्छा रहा संदीप जी।
नमस्कार मैम, नमस्कार, थैंक यू मैम।
एंड हाँ, बहुत ही इलॉबरेटेड, मतलब प्रशांत जी का तो क्या कहना, उन्होंने तो उसको इन डेप्थ लेके एक अच्छा खासा सेशन ही ले लिया। बहुत मतलब इन सच ए शॉर्ट टाइम ही टुक इट इज ग्रेट।
थैंक यू मैम, थैंक
यू। सभी ने बहुत अच्छा किया, पर इन्होंने कुछ ज्यादा स्पीड में कर दिया।
नहीं, उनकी स्पीड तो हमें रोकनी पड़ गई, उनकी स्पीड। हम तो सोच रहे थे
नो डाउट सर,
काकरा
सर वो
साहब
क्लॉज और सब क्लॉज में
proof है।
चले गए, जबकि सबका बहुत अच्छा, आप सभी का मतलब वो एक तो पावर पॉइंट मिलने से बहुत चीजें क्लियर भी हो गई, पर प्रशांत जी का तो बहुत ही अच्छा रहा।
काकरा साहब हमारे सेक्रेटरी जनरल साहब ने शायद ज्वाइन किया है, मैं रिक्वेस्ट करूंगा सर।
मैं सर कुछ देर से ज्वाइन कर सकता।
सर आपकी वॉइस वीडियो चला गया।
Gone. Sandeep ji, we are having a Mysore NTC and NEC on 3rd, 4th and 5th of August. If possible, you can have it after that so that we can
After
enjoy
that,
the
sir,
Mysore.
after that, we will organize.
Okay.
First, because budget is so much lengthy, first we
Yeah.
have to read that, understand, and any query we will organize on. No, we will not clash and never clashed any program with the other zones, and so we will.
Bhaskar
You
sir,
can,
I am coming to Mysore. We will chalk it out.
yeah, that's sir. Prashanth ji also has to come to Mysore. I want
Yes,
Sandeep to spare him for us.
Both of us
Because-
would be there. Both of us would be there, and you become a panelist for our webinar next time. Just give me
this time every professional is hanging with the income tax website because so many announcements are there in the today's budget, but nothing is there for infrastructure there, so many things are, but this e-terrorism which we are bearing as a tax professional with the income tax website, nothing has been told by madam what she will take the action about that. Kakra Sahab.
Sandeep ji, only if there is a flood, finance minister will come to your rescue, not heat.
भैया आपने जो आज 200 स्पीकर दिए माथुर साहब को, अशोक तो यानी सब शोक मिट गया, और प्रशांत जी ने तो हमारे सब अशांत मन को, विचारों को शांत कर दिया। बहुत अच्छा रहा, बहुत सुंदर रहा, बहुत बहुत धन्यवाद।
चलिए साहब, थैंक यू सो मच, थैंक यू अगेन, कीप जॉइनिंग अस। आप सभी को बहुत बहुत धन्यवाद। थैंक यू। रवि, प्लीज एंड द मीटिंग।
Thank you.
Thank you. Thank you all. Thank you.
Thank you. Thank you.
Sandeep ji, you being in Rajasthan, you have to bear the heat. Huh?
Yeah,
no other go. You can't see floods at all in Rajasthan.
No, sir. Previously, there was a flood in Badmer also. It is pure
cloudburst.
Flood in Badmer. Yeah, it is proper desert. But previously, there was a flood in Badmer. So anything can be happen in the governance of Modi ji. This time it's too hot, very high humidity. Rain is very poor. I think we are expecting the month of August because we are professional, are busy in the cabin of office now. So rain is not also coming.
Anyhow, Mathur sir is coming to Mysore. We will send him the clouds through him.
Yes, sir. You can book a cloud for sir to coming back. So the flight ticket will be. So okay, thank you, Ravi. Please end the meeting.
Yeah, I think.
हाँ सर।